All right, people, welcome back. Welcome back. It's another It's So Mon experience. Documenting in on our saga, not only just AMC, but the markets in general as well. And then we'll bring some keynotes in how this kind of all ties back into us. As we mentioned in the previous videos, Credit Suisse is on the chopping block. Things are getting detrimental over here. People, go tap in and look at my XRP video. Kind of understand how XRP works. Like I said, I'm gonna keep screaming at each video. XRP. That's the time. The time is now. And go check out the previous videos that were released, kind of documenting the saga. Like I said, we've kind of been calling out what's going on with this. But let's tap in this video, and then, like I said, we got keynotes at the end here.
Crisis different than 98? How is this crisis different than 2008?
Well, compared to 2008, right now, we don't have the credit risk yet. We're not in a recession, and the losses that occur.
Mind you guys, he's saying we don't have the credit risk. Yes, we do. Everybody here knows that all this has been fugazi. The last couple years, interest rates have been too low for the amount of money that they've been pumping out. The amount of bad loans, mortgages, all of that. Just think about that. All the bad foo-foo investments and loan outs with the stock investment, getting shorts, getting shorted in AMC plays like that, where there's just been a habitual amount of money just loaned out with no end all be all, But just finish the video here. I got some things to get on
related
chest.
to market risk. A number of financial institutions did not realize that with rising interest rates, the price of bonds would fall. And last year, U.S. banks alone have something like $620 billion of unrealized losses on their securities, with a capital of about 2.2 trillion. So the average loss is about 28%, will reduce significantly their capital ratio, the Tier 1 ratio. And for some banks, actually, the numbers, like Silicon Valley Bank, of course, the number was 100%. But there are still other regional banks where if they had to realize losses, there'll be 50% of their current capital.
Norrell, I want to go back to your Italian economics, your public service to President Clinton, where you were expert on the regulatory framework. Switzerland is a devolved federal government with the cantons with great strength. What is your knowledge of Swiss regulators right now? How removed are they from the Credit Suisse crisis, or can they be active today to help their beleaguered bank?
Well, they can be active today, even if they have a system that is delegated. However, the problem is that Credit
Big
Suisse
players pulling money out
might be
of
too
Credit
big
Suisse
to
today.
fail, but also
We'll get in
too
that.
big to be saved. It's not clear that, unlike the United States, the federal system has enough resources to engineer a bailout. And what they need certainly is more capital, and the question is whether they're going to get that capital or not. Otherwise, bad things can happen.
Well, bad things are happening this morning. Norrell, I'd love your take on this. There might be some people waking up this morning looking at what's happening with Credit Suisse, perhaps based here in the United States, and thinking, what does this mean for me? Why is this important? Could you explain to those people, Norrell, just how important Credit Suisse might be to the financial system?
Well, it's important because SVP was only about $150 billion of assets, while in the case of Credit Suisse, we're speaking about at least $700 billion.
Y'all, I want y'all to take a keynote on this now. This is a big player. Like I said, I'm going to wrap this all back together. Credit Suisse is up there, probably at that far will take the space of the largest bank failure since 2000. Obviously, this is not our direct economy, but y'all gotta understand how many assets and how many of our businesses hold our money in the Swiss banks, which were supposed to be the gold standard of banking. Your Swiss bank was supposed to be gold standard, safest place for you to put your money. So, I mean, just you tap in.
So anything will happen to Credit Suisse will be of systemic effect for not just the European financial system, but also for the global financial system. So if Silicon Valley Bank creates ripple effects in global financial market, something bad happening to Credit Suisse will be an order of magnitude more severe, something more like a Lehman moment.
A
Okay,
lot of
you
people
heard
are
the
talking about the implications
comparison.
of this on monetary policy. And Torsten Slok earlier said when the facts change, his view changes from no landing to a hard landing. He sees perhaps the end of a rate hiking cycle, as does the market, including 100 basis points of cuts in the next year. Nouriel, do you agree with this assessment? Have the facts changed where suddenly rate hikes are out of the picture and you see that the inflation story will get solved by a crisis elsewhere?
I don't think so. I think that the dilemma for central bank has gotten even worse because the latest economic data for inflation in the Eurozone or the US suggests that inflation is still too high, is falling, but is not falling as fast as the Fed or ECB want it to be. So based on what's the economy doing right now, we need to hike and hike much more. The Fed should go at least closer to 6%. The ECB should bring the deeper rate to at least 4%. The problem right now, we're facing a situation of financial instability, and financial instability would suggest to stop hiking, maybe even cutting rates, maybe even...
Guys, in layman's term, this is what we covered in that last video, where to counter inflation, Fed is needing to keep hiking these rates. These rates are what tearing up all these banks, hedge funds, anybody that had money out that they didn't actually have in a assets or in true value, where they were going out naked shorting things like that. And that's why these tweaks of hikes where interest rates were, almost down to zero, if not zero. There was a lot of foo-foo money being printed. It was easy to get loans on it. But these hikes tighten that up, and it forces those that have bad money to those, what they call like a pimple popping. What that interest rate pops those pimples. Well, the problem is now that so many pimples have been popped because of how many people had their hand in this cookie jar, right? That were doing bad, overly speculative bets, overly speculative shorts, that now the Fed is having to basically be in the consideration of trying to do a halt, because if they continue to hike, they're going to blow up the economy, right? But if they don't continue to hike, then the inflation would tear up the people that live here, right? Destroying the workers, right? Destroying the ones that make the money move, right? That drive the machine. So now Fed is sitting here in the debacle where they're about to have to sit up here with their hands sitting flat. They won't be able to do anything, and either way it goes, left or right, there's two sharks. But here we go, keep moving.
Resuming quantitative easing, and what the Fed has done is backdoor quantitative easing. But if you do that, you have a risk of the anchoring of inflation expectation. That trade-off existed even before. Raising rates would have led to stresses in financial market, like last year, where bond yields went much higher, credit spread widened. That stress is becoming more severe today because now we have systemic financial problems, but we are also in a situation inflation is staying way too high. And the idea that this financial stress is going to cause inflation to drop is not yet in the economic data. So there is a dilemma for central banks.
Although a lot of people are saying that they see credit conditions tightening. We heard earlier from Larry Fink of BlackRock saying that he sees a slow-rolling crisis that's going to move from the banking system to private credit, to
BlackRock, if I'm not mistaken, the #1 holder of assets in America. Guys, this thing might be out of control. At first, they might have known and they front ran it, but I think that this thing is spiraling out of control. And the reason that they front ran the whole situation, people selling out prior to this actual collapse happening that were insiders, right, is because I think that they know something that we don't. And even though you sit up here hearing a lot of your government officials, oh, it's all right. Go to your financial markets and see how the markets have been looking the last 3 days. Bloody.
Private equity.
Bloody.
How does your view kind of tie into this sort of inherent credit tightening that we see across a whole host of assets?
Certainly, there's going to be a tightening of financial conditions, at least in terms of credit spreads. Bond yields are falling, but on the short and long end, that's an easing of financial condition that eventually might lead to an economic slowdown. But the reality is inflation today is way too high, and it's going to remain too high because the forces that are leading to high inflation, like, for example, very tight labor market, are still with us. And therefore, that's going to be a cause of persistent inflation. And the idea that eventually tightening of financial conditions is going to cause a slowdown of the economy and a weakening of inflation is not yet in the data. So there is a really contradiction between achieving economic stability and lower inflation and maintaining financial stability today.
What a conflict. What a conflict. Nuri, I've got 45 seconds left.
That's
I
the
wanted
best way
to
to
give
word
the
it.
opportunity to try and answer this. Banks found out that a risk was where they thought the safety was. Nuri, where's the safety now?
Where's the safety now, people? Let me see. XRP, crypto, Cardano, Bitcoin. Guys, here's the hedge. Here's the hedge. You can't put your money somewhere where the government's not going to regulate and then they're going to print money. Oh, yeah.
Well, the safety is not in long-term treasuries. I've been writing for it for over a year. You know, if average inflation were to be, say, 5%, 10-year treasury eventually have to be 7%. Today, they're around 3.5%. Last year, you lost 20% on your safe bonds, more than you lost on your S&P because yield went from 1 towards 3. If they go from 3.5 to 7 over the medium term, there'll be further bloodbath on $20 trillion of long-duration risk assets. The solution is going to be short-term treasury, tips, gold, precious metals, and other hedges against inflation. That's
They just won't say it. Other hedges against inflation. All right, people.
where you have to go. And
This market and the way we move is about hedges against inflation. Believe it or not, these speculative stocks, these meme stocks, those are hedges against inflation, but you have to move in these windows. These are not hold forever. These are when the economy is smoked, those plays move. And crypto. Crypto is a long-term hold. Not just every crypto, but XRP, right? But let's tap in, guys. We got a mass majority of that. Just want to give it a coverage. Guys, we've had 3 significant bank failures. Like I said, we are having our eyes on, actually, I believe it might be 4, but we're having our eyes now on Credit Suisse because this is going to be one of those mega hitters, right? Silicon Valley went down. That was the largest bank failure. Second largest was Signature Bank, Silvergate Bank. I think First Republic went down as well, but those all comparisons are weak to, Credit Suisse that like he said, are holding $800 billion worth of assets, right? I wrote down here a note. Credit Suisse is on the brink of failure. U.S. Feds mentioned that the bank, and listen, this is our government now, saying that the bank is too large to fail, but too big to save, as the Fed only holds 125 billion of backup cash. 125 billion of backup cash, bailout cash, right, to save investors to use as the bank as a backstop. But then I mentioned up here again, Credit Suisse manages 600 to 800 billion dollars of assets. So even up on the margin 5x, there's not enough money in the Feds to cover this bank alone, and you can't even just run in there because this bank going down is going to trigger a nasty spiral. I noted down here that the Swiss bank going down is going to be a knee to the chest of anybody that's a believer in the banking market, as they're the gold standard. Bank stops have been suspended for the last 24 hours, right? Not all of them, but as they plummet down like this, 30-40%, they're suspending them off. SVD, like I said, is still under suspension. There's massive fears of contagion in the market, which is just causing further sell-off, right? And I want to note that because that is all tying in today with while AMC's down 8%, APE is down 30%. Guys, I wouldn't say to be in a panic. I wouldn't say that that the vote correlates with why the price is down. Partly might be some of that, but mass majority is the whole market downsliding, and might be a good point to keep your eye on everything. Like I said, this whole week and on through, your head needs to be on a pivot. This is not the time to be relaxed. Massive keynote today. Credit Suisse's #1 backer just pulled out. The Saudi Arabian money has now pulled out, which is the main contributor to Credit Suisse, right? And why this all ties in, guys, Credit Suisse is the direct holder of AMC shares. I think it was in between $1 million and $10 million worth of shares that they are loaning out to our shorters. Guys, this right here is a knee to the chest. It's a knee to the chest of something. It's a knee to the chest of those that's been playing with funny money. It's a knee to the chest of those that's been shorting off of margin, shorting off of loans that they can't pay. It's a knee to the chest of those that's hovering up all of them, fail to deliver. Guess what? That money's gone. That money's gone, right? So we're in a big thing. We're in a big play. I think that wraps everything up, guys. Hey, everybody, stay tuned in. Hey, like I said, go tap in and look at my XRP video. So if you don't know what XRP is, go look at it so you get a quick understanding of what's going on. It's happening now. Check out the BRIC system, central banking digital currency. If you need to know where to buy it, Uphold. I'm going to be eventually uploading a video of how to purchase XRP and those stocks like that in America if you are an American. Other places, only places those are banned from is America right now. Kwinky dink, right? While it's all this happening. And like I said, guys, appreciate you so much for the support. Hey, we'll be coming back in. Like I said, we giving coverage to all this. Hey, this isn't anything to stop this. Just the beginning of our saga, baby. We're moving around these markets. We're surfing this. Everybody, land ho, protect your boats. Protect your boats. We're floating this thing to financial freedom. But like I said, hey, we're going through a little storm with this one. But this might be one of the best storms ever. Generational wealth transfer. Hey, we'll tap back in with y'all later. Appreciate you.